Hey guys, Mark with Think Insurance, and I'm going to kind of uncover a few things that are frustrating with insurance. You clicked on this and we're going to answer the question is, why am I paying more than my neighbor? And I'm a little annoyed about seeing all of these articles, not to call this specific person out. This was some news station, and it's literally a 1.5-minute read, and none of it is valuable except for they tell you the general same thing with two pieces of information that catch your attention. The rates used to be this, and they are called to be going down, but they're not, and they're going up. Well, that was the case. They did go down, and now because COVID is supposedly over, they're going back up because a lot of people are driving. Well, the debunking of this, and we're going to answer these questions for you in the real fashion, is they're really just taking the basic information of what rates are based on. And I've made 3 or 4 videos on this channel, so if you want to look in the very specific detailed pieces, I'm going to link those around here. But they go on to explain, okay, zip code plays a factor, age plays a factor, your credit score plays a factor, which is a huge piece. And I'll link that video here because that's actually something nobody talks about online. And how do you save money? They just literally go from 5 factors and then how to save money. So let's go over the probably 5 to 10 factors that really play a difference. If you're taking notes, this is going to be extremely fast. 1, where you live makes a big difference. They're now called territories, not zip codes, because they're bundled in most states. Your age, if you're under 25, you're automatically high risk. If you're over, I want to say 65, I'll have to verify it, but you're also a high risk because more claims, it's just the data that they're taking. So you've got age, zip code, or location territory. Your marital status doesn't play as big of a factor, if at all, anymore. So if you see that in an article, usually that's not a piece of it. The vehicle that you drive doesn't really play a factor because almost every car now is a 5-star rated car. Now, if it's not, then you are going to pay more for that reason. Also, if the car is listed as a high performance, which most to all Acuras are, that's just their claim to fame that they have performance vehicles, that's going to raise the risk. Out of the country vehicles, your Mercedes or Mercedes, as you guys want to call it, your Porsche or Porsches, and your all of your aftermarket, if you're going to get a smart car, technically that's a Chrysler, I believe, or Mercedes owns them. And those are hard to get parts, so they cost a lot more to fix, and that's going to raise your risk. It's going to raise the cost for them, and that's just a higher price to pay. The location they mentioned, because if you're near a busy street or a city, then yes, that is going to play a factor, but that just falls into that territory. If you're out in the country, you're likely going to pay less, and those are the people that are paying lower than averages, the ones that aren't near those high risks, as long as they're not having a lot of incidences where they're hitting animals and whatnot, then that risk goes right back up. That's a negative to the car insurance, but there's a leeway because now the people that are out in the suburbs, or the suburbs versus the country, is the home insurance is way higher for these people because the fire station getting out to you is going to cost a little bit more. So that $1,250-ish per year average is going to be closer to $1,400, $1,500, $1,800 a year for those people versus the ones that are in the city that are near that fire station within 3 miles. The number of drivers matters as well. So the certain states are no-fault states. It matters how many people live in the house. So in Michigan, where we're at, if I have 5 people in the house, but only 2 drive, we have unlimited medical. So those 3 people that are with me are going to get counted a little bit. It's not very expensive, so I would never worry about it. But those are pieces that you want to factor in. The miles that you drive, not so much of a rating factor unless you're with a company that is on a mileage program. Like Nationwide offers a specific low mileage program where you can not just do their smart miles, they have a different program for those that want to drive lower. I'll link that video here if you guys want to check that one out. And of course, your driving history plays the biggest factor along with your credit score. It's called an insurance score. Video here to watch. But your driving history, you have tickets, accidents, things like that. It doesn't mean you're going to pay a lot more. It just means you have to find a different company. If company A is really good when you have a really good driving record and you have a ticket or an accident and the rate goes pretty high, don't just accept it because it's likely that you're not a fit for that one anymore. You should probably start looking at some different options. I'm not going to go over the companies in that specific situations. I have a couple videos on that. I'll also link below a couple companies that you should be shopping with because they check multiple companies. And as far as the discounts go, I'm going to link a video here that you guys can watch as well. So it'll go over all the discounts, but to give you a summary, if you have a multi-policy discount, that's the best. The longer you've been with the company, so if you're coming up on a renewal, it might make sense to wait an extra month if it's going to make a big difference on the price. buy the policy early, at least 10 days in advance. That way you get that early shopper discount. Make sure that your deductibles are where you want them to be so that you're not paying more if you're willing to out pocket a little bit more if you're a really good safe driver. And then also make sure that if you have young students in the household, make sure that they're getting the good student discount if they had good grades, if they're away from their school or away at school and the car stays at home. There's 100 miles or more distance between the two of you, there's an additional discount for that. There's usually an alumni discount if you're a CPA or any profession. So a CPA, an alumni, a teacher, or any of those major professions, you're likely going to have some affiliation discount that they've connected with multiple insurance companies out there. Like I said, it's a lot of work to shop. That's why I linked those two below. It kind of does the shopping for you so you don't have to worry about that part of it. Hopefully this was helpful. If you like it, share it with someone you know will get good value out of this. The thumbs up helps me the most. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.